Well, this is a multi-part series on sustainable investing, trying to understand the differences between socially responsible investing, environmental, social, and governance investing, and impact investing. This is part three, so we're going to talk about impact investing. Now, if you want to see my videos on the other two, socially responsible investing, which is kind of a opt-out type of investing, and environmental, social, and governance investing, which is more of an opt-in type of investing, you can follow these two links here. Now, the difference with impact investing, it is very much more direct, where the other two, you're investing in a large, swath of public companies to either target the ones in some way target the types of firms that you want. Again, with SRI, kind of excluding sin stocks. With ESG, you're making sure that you're getting the best ESG for whichever sectors, industries, markets that you're in. But with impact investing, it's a direct investment. It's more targeted. You're trying to make sure that you can measure a positive social and environmental impact alongside your return. That impact is truly important. This happens across asset classes. You could provide equity capital. You could provide, fixed income types of capital. And because of this, there is a broader range of return. You're not always going to get perfect market returns following the strategy. Now, this could be in the form of venture capital, where the venture capitalists are playing an active role in the firm's leadership. Could be a situation where the venture capitalists are providing money to startups in these types of companies. It's also something that has definitely been talked about recently in terms of pensions and other ERISA type plans, where they want to make some kind of sustainable social governance, environmental impact alongside their future returns and performance. Now, there is some news regarding this. So back in June, and then just this week, the Department of Labor had a proposal and then a final rule regarding the ability of pension funds to target ESG type investments, given that they have this fiduciary responsibility to have the financial interests of the participants and beneficiaries come first. So you can read or not read, but you can see those two videos here about that particular rule and how I feel about it. There is something called mission aligned investing. So this is something where a foundation that's for something will actually make active investments in the types of companies that also have the same mission that they do. So it's kind of a two-pronged approach where they are investing in a company that will have an impact, hoping to get returns, so then they can make an impact there. Um, Now, this also is something where you may not always get this market rate of return. That measurable, meaningful impact on the sustainable front is important. So there are times when you might give some money to somebody, not expecting to get a full, market rate of return. So we have things that are called kind of this below market returns and market rate returns. For foundations, this is important because they have to pay out 5% every year, and they can use this money in that way. They can kind of invest it in these things where they're not going to get this true market rate of return. Again, this impact is the key for this type of investing, very much targeted. Now, going back to this market rate versus below market rate types of returns, this gives you some sense of, what type of makeup these foundations have in terms of kind of getting market rate returns, which are like two-thirds of it, but then they have a third of it where we're not really getting the full return. So the return is less important, and the actual philanthropic impact is more important for them. Now, who's involved in all these types of impact investments? Well, you can see that it's a large number. I'm not going to read them to you, but tons of people there. Makes sense that NGOs and religious institutions, private foundations are all involved in this type of thing, but it kind of runs the gamut. Anyway, that's all for this series. I hope you now are crystal clear on the distinctions between socially responsible investing, environmental, social, and governance investing, and finally, impact investing. Thanks so much for listening.